So I'm looking at the 2015 higher level cash budgeting question. All right. And in this question, I'm asked to prepare a cash budget for 6 months from July to December 2016, and also a budgeted profit and loss for those 6 months. So just this one here, it's budgeted profit and loss. Profit and loss I'm looking for, and when it's come up looking like this, it's a profit and loss they've asked for with it. With the ordinary level examples we've looked at, it's been a budgeted balance sheet that they wanted with the cash budget. So just watch for that. Grand. So look, I'll start. Yeah, look, I'll just start going through this. So I've got sales and purchases for the 6 months totaled. Expected selling price is €50 per unit. That'll come in later. Cash collection pattern from debtors is expected to be. So cash customers, 20% of sales revenue will be for immediate cash, and a cash discount of 5% will be allowed. So the July number of €420,000, we're going to get 20% of that in July, but then we're going to knock a 5% discount off it. Credit customers then, 80% of sales revenue will be from credit customers. These debtors will pay their bills 50% in the month after sale and the remainder in the second month after sale. So 20% for cash in the month, 80% then is paid on credit, and of that 80%, half of it is the month after and half of it is 2 months after. So you'll get 80% of that 420, and then whatever that number is, half of it will be received in August, half of it will be received in September. And we'll do that then for all the months. So if you were to try and put that on kind of a single maybe sales receipts line in the budget, I'd imagine we'd be better off doing a working with that, because there'd be quite a lot to incoming to each figure for sales receipts. What we're going to do instead is so just put in a receipts heading. I'm going to put in a cash sales line. I'm going to put in a credit sales 1 month and credit sales 2 months. So if you put them in on separate lines like this, it's going to make the calculation easier and better budgeting as well, so you can see the money arriving and when it arrives. Okay, so in questions like this, I would separate out your cash sales and then the credit sales if they are received at 2 different times. All right, so we'll just go ahead and fill this in. So as I said, 20% received immediately, but we give a 5% discount. So in July, that 420,000, 20% of that is 84,000, and then take away 5%, 79,800. Okay, so that's 79,800 received in July. It's up to yourself then if you do kind of July sales a month after, 2 months after, then do August 1 month after, 2 months after, or if you wanted to do all the cash together, all the 1 month after together. I think I will do all of July's, then all of August's. So if we go back to the 420,000 figure for July, I'm told that 80% of that will be paid on credit. So 80% of that is 336,000. 50% the month after and 50% the month after that. So that's 168,000 received 1 month later in August, and 168,000 received 2 months later in September. So that's the 420,000 dealt with. Okay, 440,000 then for August. So 440,000 multiplied by 20%, take away the 5% discount, is 83,600 actually received in August. Of the 440,000, 80% is on credit, so that's 352. Half 1 month later, half 2 months later. So it's August. So 1 month later is in September, and 2 months later is in August. Okay, and then the same thing for the other months. So September, 580 by 20%, take away the 5%, is 110, 200. And then 80% of that split, okay, is going to go in October and November. So I'll just fill the rest of these out. You're going to calculate them the same way. And then in November as well, October, 590,000 by 20%, take away 5%, is 112,100. The 590 by 80%, and then half in November, half in December. That's going to be 236 here and 236 here. Okay, November's then 20%, take away 5% of the 620 is 117,800. Of the 620 then, 80% is paid on credit, 50% received a month later in December, 248,000. 50% then received a month later in January, but we're not interested in that. That's in the next budgeting period. Okay, we're only going up as far as December. Okay, equally then December, you're going to do 625,000 by 20% is that. Take away the 5% or multiply it by 95%, 118,750. And then the December credit sales, they're going to be received in January and February. That's outside the period we're looking at, so we're not worried about those. All right. That's all the receipts you have in the question. Okay. Look, I would say go down and read through it and check what you have, but having glanced down through it myself, I know there's no other receipts. All right. There is the receipt of a loan later on in the question, but that doesn't go up here in receipts. It goes down with the kind of cash section at the end. All right. So you're going to sum this across first, I suppose. So cash sales are, adding these 6 here, 622,250. Adding the credit sales 1 month, 1,060. And then 812,000, summing the credit sales 2 months. Okay, add each month then as well. So July is just 79,800. August is 251,600. September 454,200. October 520,100. November 585,800. December 602,750. And the total then, you can either total the 3 of these or you could total the 6 of these across. It should give you the same answer. 2,494,250. Okay, that's all my receipts done. So I'm going to then have my purchases, or sorry, payments. What should we call that? So receipts and payments. And then on the other side, I'm going to have, this purchases will be my first entry. So the cash payments pattern for purchases is expected to be, the purchases will be paid for 50% in the month after purchase, when a 2% cash discount will be received. The remaining purchases will be paid for in the second month after purchase. Okay, so of this 180,000 in July, 50% less a 2% discount is paid in August, and 50% is paid in September. Okay, so if it's, so I'll split those out again. So purchases 1 month, purchases 2 months. Okay, so there's none paid for with cash paid for straight away. So the 180,000 in August, 50% the month after purchase, less 2%, and then the other 50% is paid for 2 months after purchase. So 180,000 in July, 50% of that is 90,000, and then take away your 2% discount here. So 50% of the 180 is 90,000, take away 2% is 88,200. So that is August's purchases 1 month. Okay, and then the 180,000, the other half of that is paid 2 months later in September. So there's 90,000. Okay, August's then 220,000 is the purchases. So 50% of that is 110,000. Take away the 2% is 107,800. So that is August's. So that will be 1 month later in September, 107,800. And then the 50%, which is paid for in August, there's no discount there. So it's just 50% of 220,000 is 110,000. In September, 260,000. So 50% of that is 130,000. We get a 2% discount the month after. So that is in October, 127,400. And then 50% 2 months later in November. So 260 by 50% is 130,000. The 265 then in October, 50% of that is 132,500. So that's December's, if you like, 2 months. If you want to put that one in first before taking away the discount. And then here is going to be after you take away the 2%. So minus 2%, or you could multiply by 98% or 0.98, 129,850. And then November's 340 here, half of that is 170,000. And then take away your 2% is 166,600 paid in December. Okay, so total is 2 up then. You can do it at the end, you can do it now. So 619,850, 462, 500. All right, next. So that's kind of all of this dealt with. It's all of this dealt with. It's all my purchases dealt with as well. So expenses of the business will be settled as follows. Wages 60 grand a month, payable as incurred. So that's a straightforward wages, 60,000 each month. And then 660s, 360,000. So that's wages. Variable overheads, €10 per unit, payable as incurred. Okay, so €10 per unit. So you need to figure out how many units you're selling. Okay, so in July your sales is €420,000, and you're told the selling price is €50 per unit. So if you do €420,000 divided by €50, that's 8,400 units sold. All right. You could write them in kind of up here, units, and then put the numbers in here, because it might be helpful to kind of work them all out first and then do them. Or you could do a working for this one maybe, okay, and just kind of have all your units sold written month by month down here. You're not going to put it kind of in the budget. All we're going to put in the budget is the variable overheads, but yeah, it might help down here just working 1, so just units. And then you don't even need to kind of put your workings down on paper, it's more just kind of writing down what the numbers are, just in case I need them. So July, August, September, October, November, December. So look, you might get away without doing this, but if you want to do this, so the 420 divided by 50 is 8,400. The in August then it's 440,000 divided by 50. And that's 8,800. In September, it's 580 divided by 50. So that's 11,600. In November, 590,000 divided by 50, so 11,800. November, 620,000 divided by 50 is 12,400. And December, it's 625,000 divided by €50 per unit is 12,500. Okay, you're going to multiply them then by 10. So look, if you want, like I said, if you want to put the workings in here, it's not a bad idea. Sorry. So 8,400 multiplied by 10, 84,000. 8,800 by 10, 88,000. So yeah, 11,600 by 10, 116. Okay, so that's just a little working for variable overheads. Okay, you could do that. You could do those on the calculator if you wanted. It probably wasn't 100% necessary to do a working, but they're done now. So if I put in my variable overheads, so it's payable as incurred, so it's just July's in July, August in August. Okay, there's no need to delay them or anything like that. So it's 84,000 for July, 88,000 for August, 116,000 for September, 118,000 for October, 124,000 for November, 125,000 for December. Add those up and they come to 655,000. Next one up then. Fixed overheads including depreciation, 65,000 per month. Okay, so 65,000 per month including depreciation. I need to strip the depreciation out of that. So depreciation is not a flow of cash. Okay, we're doing a cash budget, so I need to get the depreciation out of that 65,000. They're going to give me the depreciation information then here in capital costs. So equipment will be purchased on the 1st of July costing €42,000, which will have a useful life of 5 years. So that's enough to get me the depreciation. Okay, and it's going to give me information down about financing and stuff that I'm going to need to put in as well, but that's enough. So maybe working too. So equipment cost €42,000. Its useful economic life is 5 years. So we're going to divide that by 5. So that's depreciation per year. And then we're doing a monthly budget. So it's like a monthly depreciation figure that I need to get out of this 65,000 fixed overheads a month. So I want a monthly depreciation figure. So divide that 8,400 by 12. And I get €700 monthly depreciation. Okay, or you could have said 5 years is 60 months, 42,000 divided by 60 is €700 per month. Okay, but remember, that's what depreciation is. It's writing off the cost of the asset over its useful economic life. Okay, so that's what it's telling you, is that the 42,000 is going to be written off, depreciated over 5 years. That's how you get the 8,400 divided by 12 for the monthly number is 700. Okay, so this 65,000 here, so 65,000 fixed overheads, take away 700 depreciation is 64,300. Okay, and that's the fixed overheads that you're going to put in the cash budget. Alright, so 64,300 in each month. And total them up, 6 of those is 385,800. Now, that kind of took me down to here in the capital costs. To finance this purchase, a loan of 36,000 will have to be secured at 6% per annum. The capital sum is to be repaid in 36 monthly instalments commencing on the 1st of August. The interest for each month is to be paid on the last day of that month based on the amount of the loan outstanding at that date. Alright, so there's a little bit to work out here. So we're purchasing the equipment in July, we're doing the budget from July. So that 36,000 loan, as I said, that's going to go right at the end of the budget in with net cash and opening balance. What else do we need to do? The repayments are going to go in, their payments. So the capital sum is to be repaid in 36 monthly installments commencing on 1 August. So 36,000 for the loan divided by 36 months is €1,000 per month repayment. Alright, and that's just going to go in payments from the 1st of August. Okay, so we can go ahead and put that in. So that's the loan repayment. So that starts on the 1st of August and it's 1,000 a month. So 1,000, 1,000, 1,000, 1,000, 1,000. So that's 5,000. Adding it together. The interest then, so the interest for each month is to be paid on the last day of the month based on the amount of the loan outstanding at that date. So we received 36,000 in July. At the end of July, we haven't made any repayments, okay? So you don't start making repayments until August. So at the end of July, you owe 36,000. So 6% of that is 2,160 interest. But it's 6% per annum. So that 2,160 would be like a full year's interest. We're only doing 1 month's interest. So we divide this 2,160 by 12. and that's 180. So that's equal to July interest. On the 1st of August, we repay €1,000. So now, at the end of August, we only owe 35,000. So 6% interest of that is 2,100. But again, we're only interested in 1 month's interest. We're paying this month by month. So divide that by 12, and that is 175. That's the August interest. September then, you repay 1,000. You've repaid another 1,000, so 34,000 by 6% is 2,040. Divided by 12 is 170, is equal to the September interest. So you might kind of see a pattern developing here, but if you want to kind of be sure, maybe do all the other months. So this is September, October, November will be 32,000, and December you'll owe 31,000 because we're repaying 1,000 per month. Okay, we're going to multiply each of them by 6%. We're going to divide each of them by 12. And that's going to give us our monthly interest. So 33,000 by 6% is 1980. Divided by 12 is 165. 32,000 by 6% is 1920. Divided by 12 is 160. 31,000 by 6% divided by 12 is our 155. So October, November, and December interest. Okay, so put those into, so it's 180 in July and coming down €5 each time. So that is your interest repayment. So 180, 175, 170, 165, 160, 155. Add all those together, it's 1,005. What else? I missed. Yeah, so sorry. Just capital cost. Equipment will be purchased on the 1st of July, costing €42,000. Okay, so that's an outflow of cash. Okay, so we finance the purchase using a loan of 36,000. So that 36,000, as I say, is coming in down the bottom in the net cash section, but we actually purchase this equipment for €42,000. So that is an outflow in July as well. So equipment, €42,000, and that's just a one-off in July. All right, so that's all my entries for payments. So you're going to total all of these. So that's 250, 480, 301, 675, 439, 270, 480, 865, 509, 310, 549, 555, and 2531155 for the total. Again, you could get that by adding up these or these. You should get the same answer. I'll call that total payments, and I probably should have called this one up here total receipts. So what we're going to have now then is my net cash, which is just going to be total receipts, take away total payments. I'm going to put the bank loan in here when I receive that, and then opening cash and closing cash as normal. Okay. Just a quick glance at the question. There isn't, so it's a startup business, and it doesn't mention having any cash at the very start. So you're not going to have opening cash or opening balance here. So that's going to be 0. So let's do all our net cashes then. So that's total receipts, take away total payments. So the 79,800 take away the 250,480 is negative 170,680. 251 take away the 301, that's going to be negative 50,075 plus 14,930 plus 39,235 in November, it's plus 76,490, 53,195 in December, and then the total is going to be minus 36,905. The bank loan then, so the 36,000 comes in July, so that's a plus 36,000 in July. So as I said, no opening cash mentioned in the question, no kind of list of assets at the start, because it's a startup. They're only setting up the business. So net cash, so negative 176,80 plus 36,000 loan is going to give me closing cash of minus 134,680. That comes up here as opening cash for August, 134,680. So negative 150 plus negative 134 is negative 184,755. Bring that up then as the opening cash the next month. Add those, minus 169,825. Bring it up. Add those, minus 130,590. Bring it up here, 130,590. Add those, minus 54,100. Bring it up here, minus 54,100. Add these, and you're minus 905. Okay, so don't forget then your total is the total for July to December. So a summary of the 6 months. So the opening cash here is the opening cash for August, 0. And the closing cash here is the closing cash for December. But it should also be the net cash plus the bank loan plus the 0. And yes, minus 36,905 plus 36,000 isn't minus 905 closing cash. So both of them matching is a pretty good indication that you've got it correct. Okay, I'll do the budgeted profit and loss that you have to do in a separate video.